It's with a very heavy heart that I regret to inform everybody that I died. Yes, I'm dead. May I rest in peace. Here, according to Daniel, rest in peace, Dr. Cal. Thank you for all that you've done to the investing community, as well as the Discord. As you all know, our dear YouTuber, Dr. Cal, passed away on the 5th of November at approximately 12:50 p.m. from an unfortunate car crash accident. He will forever be remembered and laid to rest on the 18th. Join us as we live stream my burial. I mean, Daniel, what are you talking about, dude? This stuff is insane. Welcome back, you legends. I'm Dr. Cal, and long time no see. I'm alive and well, legends, and I've missed you so much. I've just been going through some crazy life situations the last week. And with daylight saving time ending on Monday, the market now closes at midnight every day for me, and it takes anywhere between 3 to 4 to 5, sometimes 8 hours to get a video done, to get all the work done, all of the analysis and the charts ready, and to get the video done. So it was really tough. I don't want to get into too many personal things, but my wife also recently had a surgery. I've relocated to a completely different country. I'm still going through that. So apologies, everybody. My regular upload schedule, fingers crossed, will be back starting today. I'm back with the vengeance, and I just simply could not miss the opportunity to post a video today, especially after that absolute insane day in the market. I mean, when was the last time that we saw 7% up on the Nasdaq? I honestly can't remember. Probably you would probably have to go back all the way to the 2020 pandemic to see anything like this. Sea of green. Nvidia up 14%, AMD up 14%, Amazon 12%, Apple nearly 9%. A $2+ trillion company up over 8% in a single day. Absolutely insane. Everything is green. Tech, cyclicals leading, so it's a full-on risk-on move. So what the hell happened? This is the S&P 500 daily chart. We had CPI come out and it missed massively, 7.7% versus 8.2 in the previous month and 8.1 for the forecast. So this was a massive miss, and as soon as I saw that, I knew exactly what was going to happen. And here it is at 4:34 p.m. I'm at UTC +3, everyone. So 4:34 p.m. is 8:34 a.m. Eastern time. So this was just as soon as that CPI print came out. And look at this massive miss. We're going to the moon by everything. That's exactly what we did. We basically bought everything today and we made a killing. I don't think I've ever seen as many 1,000+% gainers in the gains channel than today. It was absolutely nuts. Let's take a quick look, everybody. This legend right here, over 10,000% just today. This other legend made over $160,000 just today. This legend made over $11,000. This legend made over $8,000. This legend had multiple trades that made over 100% just today. This legend made over $2,000. Again, 2,000%, over 100%, 70%, 70%, 100%, 300 to 400%. These go on and on and on. I'm just going through them very quickly, and I do have to say, everybody, the vast majority of these trades were 100% attributable to the traders that made them. They did not have anything to do with me. All I did was share my analysis and guidance, and the vast majority of these traders made their own trades, made their own money, and that's exactly the goal of this trading community, the Money Time Machine trading community, is for me to see things like this. I love seeing traders making their own money, developing their own strategies, being successful at it in this extraordinarily difficult market. Now, I do post every single trade and investment that I make in real time, simply because I think it's very beneficial for new traders, especially to see how I apply my analysis to the real market, how I take that analysis, how I take that information and put an action behind it, where I put my money where my mouth is. And a lot of traders will take those trades and make variations of them, more aggressive variations, more conservative variations, using options, futures, or just trading stocks. There's a lot more where these came from. I'm going to go through them more quickly right here. $14,000, $4,000, 35%, over 400%, multiple thousands of dollars, 50%, and right over here, boom, over 200%. Again, 30%, $70,000 for this legend, and it was his best day trade ever. Imagine making $70,000 in a single day. That's more than what the average family makes in an entire year. That's more than the median income made in a single day. That's true financial freedom, everybody. But nothing comes close to this. One of our very own legends directly messaged me some otherworldly performance that I've never seen anything like in my entire life. He took a $70 account, that's right, $70, to over $40,000 in a single month. I mean, you'd have to, if anybody told me that they did this, I would not believe it, but he showed me the money. Look at this. He turned this account from $77 to over $47,000. Take a look at this, 14,000% in a month, and he started with just over $77. Absolutely incredible. I mean, I have to give a round of applause to all of the incredibly talented legends that made so much money today, including one of our very own legendary traders who actually front-runned the CPI print, and he got it exactly right, and he made over 3 times his money. Sir Thomas, congratulations, amazing trade. And it wasn't like this came out of the blue. We were actually anticipating a very massive move today. In fact, just a couple of days ago, I told everybody, please try to maintain a very large cash position going into Thursday's CPI print. It will likely be a monstrous day. And I do have some more good news. There is actually no major risk for the market on the calendar for a while. FOMC minutes don't come out until November 23rd. The next Fed meeting isn't until December 13th. So this rally has a very long runway to continue. So what are we looking at right now? Well, the weekly expected move, everybody, for the S&P 500 was $390. We overshot that level. We could easily see actually the S&P go up to $400 by as early as next Monday. Just bear in mind that after such a massive move to the upside, taking out the weekly expected move, we could still see some more push to the upside as early as Friday or even Monday. But at that point, after we hit $400, I think the market will try to consolidate, digest this massive move to the upside before continuing to move up even higher. Remember this trend line, everybody. I talked about this trend line in prior videos, this significant resistance line, not a trend line, a resistance line. We tagged it once rejected, twice rejected, 3 times rejected, and we will likely still reject it. I have to be very clear, this massive rally to the upside does not mean that the bear market is over. It's absolutely not over. This is just a very strong counter trend rally. A massive counter trend rally that's likely going to be the size of the summer rally, that massive summer rally that we had. So we do still have significant resistance up ahead at $410 in November. This resistance goes slightly down in December to around $405. But I think that $410 is a safe bet where you can expect the market to see significant resistance and potentially start to turn back around. Now, with that being said, there's still a lot of upside left here, everybody, and we plan on taking advantage of that upside to the fullest. Let's take a look at the weekly chart for the S&P 500 index, the SPX, and this is now officially a bull flag. In fact, a full measured move on this bull flag. Let's take a look from the bottom the top of this flag, and then from the bottom of the flag to the top again is, look at that, 4100, the top of this prior resistance level and the top of this resistance level as well. Let's take a look at the daily chart. What we're looking at is resistance right here, 410 bucks, and again 410 bucks. So 410 is likely going to be a strong resistance. $390 is now officially a support level. It acted as significant resistance in the past. It is now a support level. If we pull back to 390, I would be buying at this level. In fact, we are now in a very strong uptrend, and sell-offs should be bought to the upside. Let's take a look at the Nasdaq. The Nasdaq has an even stronger runway. Look at this monstrous divergence right here. Double bottom with significantly higher low right here. This divergence is now confirmed to the upside after this massive move and the close above the 50-day moving average, this green line. We have a significant runway ahead of us here on the Nasdaq. About 10% left in upside for the Nasdaq. So I would definitely now focus on going long the Nasdaq more so than the S&P or the Dow Jones. Focus on tech, cyclicals, really risk on aggressive sectors. They're going to do extremely well now as yields have come crashing down. Let's take a look at yields. Now, we were actually anticipating this breakdown for a while now. We spotted this head and shoulders top formation, and we were expecting the 10-year yield to break on the day of CPI, and that's exactly what happened. Let's take a quick look. I posted this on November 3rd, the next domino to fall after the dollar index topped, and the dollar index did top. I talked about this on November 3rd. The next domino to fall is going to be the 10-year yield. It is now forming a head and shoulders pattern, which needs to break on Thursday on the CPI release. Assuming inflation comes below expectations, this will confirm October 13th as the bottom for the year, and the market will continue its new uptrend barring any negative surprises. Now guys, if you remember, I actually posted this video on October 13th, stock market bottoming. This is the final crash right over here, October 13th. And I was referring to this day. We actually expected the market to bottom on October 13th, a day before we called the bottom, just a day before it happened. A lot of our members, in fact, bought this significant gap down and rode it to the upside. One of our members even made over 10,000%. 10,000%. To put that into perspective, 10,000% on $10,000 is over $1 million in a single day. In one day. We're now getting these monstrous, life-changing type of moves pretty much every month in this bear market. And so with yields breaking down and now firmly establishing a downtrend and a clear top at 4.3%, you can expect valuations, stock market valuations, company valuations to skyrocket. This is what we call the everything rally, the insane FOMO, fear of missing out rally, where everything goes to the upside, especially the riskiest assets, the hyper growth names, the growth names, the big cap tech, the consumer discretionaries, all of the risky assets that the market was dumping throughout 2022 will now go to the moon and have already started going to the moon. Let's take a look at another chart. This chart is for gold, and gold did bottom back here. September 27th, we retested this bottom 3 times. We took it out just earlier this month with a significant positive divergence, confirming that this is indeed the bottom for gold, at least for now. And gold has been ripping to the moon since. Now, gold is very sensitive to yields, and so is the S&P 500. And so I track this chart, everybody, because it also helps me time the S&P 500. And we did have a couple of whipsaw signals here. I look at bullish crossovers for the market to move up, and we did have one bullish crossover here. The market rallied just a couple of days later. We had another one here. The market rallied a couple of days later. We did get a dump before the CPI, which is expected. We actually sold down to $374, which is actually the middle of the weekly expected move. So that was totally normal, and the market simply did not know what to do before CPI. Nobody could have predicted exactly what the CPI print will look like, and this was evidently clear in all of these indecision dojis. Indecision. The market had no idea what it wanted to do, and so it sold off back to the mid-range of the weekly expected move in anticipation of this move to the upside. Now, to take advantage of this massive rally, you did not need to front-run CPI and take on unwarranted risk. You could have easily just waited for the CPI print to come out and enter in the pre-market, or actually enter at the market open, which is what we did, and we made some really nice gains. By the way, guys, if you're interested in stock market analysis like this, I do go over a lot more charts in the trading community simply because it's way more efficient for me, especially this last week as I've been on a time crunch. I've actually been covering the market every single day, pre-market and intra-market as well as post-market. I've cut down just a tiny bit on my intra-market analysis because I've gotten a lot of requests from traders looking for more swing trades, less so minute by minute day trades and so on. And I actually agree with that. I think swing trading is the way to go in the majority of cases, but when volatility is super high, we tend to day trade more simply because you cannot swing trade in choppy environments like this. Look at this. If you swung the market here, you would have actually lost money just a few days later if you did not take profits a day later or a couple of days later, or even intraday right here, you would have lost a lot of money just the next day. So sometimes it makes a lot of sense to take profit the same day. Sometimes it makes sense to hold for longer as volatility continues to contract, everybody. And look at this, volatility has been contracting significantly. As it continues to do that, it will be safer and safer to hold trades for longer, and swing trades will begin to outperform day trades. And so in the trading community, I do post every single trade and investment that I make in my trades. I also post all of my analysis in the live analysis channel. I also post my weekly watch list and weekly expected moves in watch list. Also building a library of all of my charts, live links to every single chart that you see in all of my videos in my chart, so you can check any chart that you want. S&P 500, NASDAQ, my CPC buy and sell signal, my VIX chart, my yields chart, and you will see annotations on the charts. Sometimes I'll put in levels of resistance and support. Most times I'll just mention those levels here in written format in the live analysis channel, my price targets, etc. It's $30 a month if you go for the annual Ghost Legend membership, and it's the best way to track all of my analysis and trades in real time, especially in times like now when my schedule is just so hectic and sometimes I'm just unable to get the videos out. This way you get all of that and more. And it's also the best way to support me and support my work if that's something that you want to do. Thank you everybody for your incredible support. We now have over 1,300 active members in here. And even as I stopped uploading, we got more and more members. I do love making the videos, guys. I'm not going to stop making the videos. It's just sometimes really difficult to get the videos out, but I'll continue to try my best to get the videos out. Let's take a look at the dollar index. Boom. Top, triple top formation, significant negative divergence, rejected right here. I talked about this rejection again in the trading community. Here you go. If you scroll up just a little bit, you will see the bears needed the dollar to regain bullish momentum and failed today very decisively. Look at this. Boom. November 4th, failed decisively. And that was that. The uptrend for the dollar was over, at least for the medium term. And this will allow the stock market to fly. I just don't want to give the wrong impression here, everybody. I'm still bearish long term. All of the yield curves have inverted, and that signal has had an accuracy track record of 100% going back 100 years. And so the chances of a recession next year is basically 100% at this point. And this is a counter trend rally, it's going to be a very monstrous counter trend rally. Just keep in mind that in the 2000 bear market, we had over 7 bear market rallies with over 20% upside. So these rallies are common, everybody. They're not rare. They are common in bear markets. And this is an extraordinarily unique bear market. And I think FOMO and euphoria will grow to some insane levels this month, perhaps even next month in December. But as more and more economic data weakens, more and more market participants will realize that this short uptrend will not last for long. Let's take a look at another chart here. Down below is the Dow Jones Transports. Up top is the Dow Jones Industrials. This is the Dow Theory model. Again, a link to this chart will be available in the trading community. Every single time we had a divergence, everybody, the market actually significantly sold off. And there is a divergence as of right now. However, I have to mention that this divergence could easily be taken out as we see more and more green days. So we'll see, but I have to keep an eye out on this chart because rallies need to be confirmed by the Dow Transports, and so far the Dow Transports just the last few days have actually been outperforming the Dow Jones Industrials. Look at this. Clearly this is a steeper uptrend than this, and so for now the transports are confirming a new uptrend even though there's a bearish divergence. That's why subtleties are very important in technical analysis. Again, with all of that being said, we could still rally to the upside. The Dow could even take out this high. But if the transports eventually fail to take out this high right here and they form a divergence, boom, like that, in let's say a couple weeks time, that'll be a signal for the market to pull back, perhaps to exit and reposition later. Let's take a look at another chart. This is the $1 million chart. In fact, this chart is what allowed us to call the bottom exactly on the day, that October 13th bottom. And I talked a lot about this monstrous divergence between the S&P 500 down below and the breadth up top. Stock market breadth has significantly outpaced the S&P 500, indicating that mid-cap and small-cap stocks have been doing better than big-cap companies. That's actually very bullish. That's a risk-on sign. And I talked about this throughout October. I talked about this pretty much every single day. We're still seeing significant outperformance by the breadth versus the S&P 500. Look at this steep difference. And as long as this ratio continues to move to the upside, it will allow the stock market to move even higher and big cap tech companies to catch up with mid cap and small cap companies. Let's take a look at the economic calendar, everybody. Look at this. CPI came in today much cooler than expected. The market absolutely went to the moon. As soon as we saw that, we knew exactly what we needed to do. We needed to buy every single thing because valuations were going to expand, yields collapse, and it just made total sense. Now, we do have some key economic events coming up, but nothing as important as CPI. We do have consumer sentiment coming up tomorrow. We also have PPI on Tuesday, next Tuesday. But there's really nothing important, nothing to stop this rally on the calendar all the way into November 23rd when the FOMC minutes are going to come out. FOMC minutes will no doubtedly introduce some volatility, but they could also allow the market to continue to rally all the way into December. This vertical red line is the FOMC minutes on November 23rd. The next Fed meeting is going to take place on December 13th. In fact, if the Fed continues to talk about a pause, and if they hint at interest rate hikes stopping next year as soon as January, that's still a very strong possibility that the Fed will actually introduce the last rate hike in December and just pause. That will allow the market to continue to rally. We could even take out this resistance line at that point. It is too early to tell, but that's still possible. In fact, we could see some insane FOMO rallies towards the end of the year, where everybody perhaps begins to mistakenly think that the bear market is over, but the bear market does not end until the 50-day moving average, this green line, crosses above the 200-day moving average, this dark blue line, with the S&P 500 trading above both. That's the only way this bear market is going to end on a technical level. In fact, I will show you exactly what happened in the 2000 bear market. Let's take a quick look. Look at this legend. We had this significant bottom in mid-2001. The market had this monstrous rally. It continued to move sideways and make higher lows. We actually closed above the 200-day moving average for several weeks, but the market did not bottom. Why? Well, look at this. The 50-day moving average, this green line, never crossed above the 200-day moving average, and the market ended up, look at this, boom, massive sell-off, took out this low, and it continued to sell off for several months. In fact, since that close above the 200-day moving average, the market did not bottom until about 4 months later, And in fact, the bear market did not end since that close above the 200-day moving average until a year later. Look at this. It ended right here. Boom. March of 2003. A year later, officially, the crossover did not happen until May a year later. That's all I have for you today, guys. Thank you so much for watching, and I'll catch you all in the next one. Bye-bye.
Oh, wow.